In early 2025, gold shattered every record, surging past $4,000 an ounce, the highest price ever recorded. China's Zijin Mining Group raised $3.2 billion in a massive gold sector IPO. Meanwhile, the G7's freezing of Russia's central bank assets in 2022 sent shockwaves through every treasury office on Earth. These weren't random events. They were signals flashing red warnings that the financial order built after World War II was quietly breaking apart. For decades, the world trusted paper. The dollar was not just money. It was power, the invisible spine of global trade. But trust is fragile. When Washington weaponized the dollar through sanctions, it forced rivals and even allies to ask a forbidden question: what if our reserves aren't safe? Gold, once dismissed as a relic, became a shield. Central banks that had sold it off in the 1990s were now hoarding it again. In 2023 alone, they bought more than 1,000 metric tons, the largest annual increase since records began. Behind each ton was fear. Fear of inflation, fear of sanctions, fear of a system built on promises no longer believed. The headlines call it a bull market. But beneath the surface, something deeper moves. Gold's rise isn't about investors chasing profits. It's about nations preparing for a new kind of financial war, one where confidence, not currency, is the first casualty. To understand why gold has become the most political metal on Earth, we need to go back in time to when the world last lost faith in paper, when gold was not just a commodity, but a verdict on the system itself. It began in 1944, inside a quiet resort in Bretton Woods, New Hampshire. Delegates from 44 allied nations gathered to design a new monetary order. Out of that meeting rose a global hierarchy: one metal, one currency, one promise. The United States held over 2/3 of the world's gold, so its dollar became as good as gold itself. Every nation's reserve, every trade settlement, every debt contract ultimately tied back to the green paper of America. For decades, the system worked until it didn't. By the late 1960s, U.S. spending on Vietnam and the Great Society flooded the world with dollars, far more than its gold reserves could cover. In 1971, President Richard Nixon severed the final link. The gold window was closed. The dollar no longer represented metal. It represented faith. At first, that faith held strong. Petrodollar arrangements in the 1970s forced the world to keep using the U.S. currency. The system survived shocks, recessions, and oil embargoes. But in the background, small cracks began to spread. The Federal Reserve's repeated bailouts, the Asian financial crisis of 1997, the global financial meltdown of 2008, each event demanded more printed promises. The supply of money grew, the trust behind it did not. By the 2010s, the dollar still ruled, but its aura of permanence had dimmed. China, Russia, and emerging economies began diversifying. The People's Bank of China, once a net seller, quietly became one of the world's largest gold buyers. The World Gold Council reported that global central bank purchases exceeded 1,000 tons annually, reversing decades of decline. Gold was being rearmed, not as jewelry or hedge fund speculation, but as insurance against a world where the U.S. could turn money into a weapon. Trade wars, tariffs, and sanctions turned the global economy into a chessboard of suspicion. When the G7 froze Russia's $300 billion in reserves after its 2022 invasion of Ukraine, every finance minister from Riyadh to Beijing took notice. If the world's reserves could be locked with a signature, then no vault was truly safe except the ones filled with gold. The year 2022 was the breaking point. When Russian tanks rolled into Ukraine, it wasn't just a war of territory, it was a war of currency. Within days, the United States and its G7 allies froze over $300 billion of Russia's central bank reserves, a weapon never used at this scale before. The message was clear. Global money was no longer neutral. It could be turned on and off like a switch. To Western policymakers, it was punishment. To the rest of the world, it was a revelation. What had been unthinkable, that reserves could be confiscated, became policy. Within months, central banks from China, India, Turkey, and Saudi Arabia began increasing their gold holdings at a pace unseen since the 1970s. The World Gold Council reported record purchases, 1,082 metric tons in 2022, followed by another surge in 2023. Gold was no longer a hedge. It was insurance against geopolitics. Meanwhile, a different panic spread through markets. Inflation in the U.S. hit a 40-year high of 9.1%, eroding trust in fiat stability. The The dollar index fell sharply in early 2023, marking its steepest 6-month decline in half a century. Major ETFs like SPDR Gold shares absorbed billions in new inflows as investors sought refuge from both inflation and instability. Then, in 2024, headlines proclaimed a new gold rush. But this was no frenzy of miners or speculators. It was a quiet exodus of capital, of confidence, of sovereignty. Nations began experimenting with currency swaps settled in gold, and the BRICS bloc accelerated plans for a non-dollar settlement system backed by tangible reserves. Western analysts called it de-dollarization. But to the architects in Beijing, Moscow, and Riyadh, it was something more profound, the restoration of monetary sovereignty. The world was not abandoning the dollar for ideology. It was fleeing from dependence. The surface story was about price charts and safe havens. The real story was about power. The secret behind gold's rise isn't in its shine, it's in its silence. Every ton of gold bought by a central bank is a vote against the existing order. Behind the headlines of record demand lies a coordinated shift, a new system taking shape in the shadows. Economists call it reserve diversification. But in truth, it is sanction insurance. After 2022, financial elites realized a brutal fact. Assets held in dollars or euros aren't really theirs. They are permissions revocable at will. Nations began looking for something outside the Western clearing system, something with no counterparty risk, no political switch. Gold fit perfectly. China's central bank quietly added gold for 19 consecutive months through 2024, while simultaneously dumping U.S. treasuries. Poland, Singapore, and Turkey joined the race. Even neutral Switzerland saw vault inflows soar. The mechanism was global, yet invisible, a silent network of states exchanging paper for metal. It had happened before. In the 1930s, as currencies collapsed during the Great Depression, nations hoarded gold to protect sovereignty. In the 1970s, runaway inflation drove a 20-fold revaluation of the metal. Each time, the signal was the same. When faith in paper weakens, gold reclaims its throne. But this time, the stakes are higher. The financial plumbing of the 21st century runs on digital rails, instant settlement, programmable currencies, and global surveillance of flows. In such a world, gold has become the only untrackable vote left. That is the hidden mechanism. Gold is not rising because of inflation or speculation. It is rising because the system is being quietly rewritten beneath it. What was once a relic of empire has become the firewall of sovereignty. Gold's rise is not a celebration, it's a warning. Every spike in its price marks a crack in the foundation of global trust. When central banks buy gold, they're not chasing profit. They're confessing fear that the monetary system built in 1944 at Bretton Woods, anchored by faith in the US dollar, is reaching its natural limit. And ordinary people always feel that fear last. By the time gold begins to roar, the damage is already spreading. Prices climb, savings shrink, currencies weaken. The world's elites hedge with bullion bars. The rest of us pay with inflation. Look around. The US national debt has crossed $35 trillion. Interest costs now rival defense spending. Major economies like Japan and Italy are trapped in debt spirals that can only be managed by endless money creation. Every new round of quantitative easing erodes purchasing power, quietly taxing the public to preserve the illusion of stability. Meanwhile, gold tells the truth that politicians won't. It has no central bank, no printing press, no bailout. It reflects only trust, or the loss of it. That's why nations are running back to it. Not because they love gold, because they no longer believe in each other. And so, once again, history begins to rhyme. Like in the 1970s, the world is shifting beneath its currency system. But unlike before, there is no new Bretton Woods waiting to be written, just a quiet return to something older, colder, and heavier. Gold's rise is not about wealth. It's about fear turned tangible. When the price of gold climbs, it's not market speaking. It's civilization whispering we don't trust paper anymore.